Good afternoon, everybody, and welcome to the Weekly Traders Group. This is your host, Gary Humeski. It's a little bit after 4 p.m. Eastern Standard Time on Monday, February the 2nd. I want to welcome all the existing members and staying with the program, and hopefully this is educational. I want to welcome all the new people as well, and hope that you benefit as well as the existing members that benefit quite a bit from these weekly Traders Group meeting. So we're running a little bit late. Without any further ado, let's get through the disclosure. These webinars are for educational purposes only. I am not giving any trading advice whatsoever. New picture. I want to show you guys my two animals that are my pride and joy. Okay, let's take a look at the macro picture. And by the way, I'm kind of bearish this week, just so you guys know up front. On the left side is the Dow Jones 1-year daily chart. In the middle is the S&P 500. Yearly daily chart, and on the far right is the NASDAQ 1-year daily chart. And I've thrown in the Fibonacci retracements on all three indexes so everybody can see and you can gauge and write down, if you want visually, what are going to be the resistance and support levels. These are going to be obviously support levels based on Fibonacci, which is very, very accurate. We do have a detrending price oscillator continuing to go down on the Dow. The Dow is in a distinct downtrend. So is the S&P, and so is the NASDAQ. As a matter of fact, last Friday is when we first broke the Bollinger Bands, which are actually tweaked Bollinger Bands, not your standard. They're David Elliott's. We still have a positive detrending price oscillator coming up from being oversold below the middle line on the NASDAQ. But a lot of that, folks, has to do with Apple. Apple still, even though they had a 7-to-1 split last year, they diluted the shares, but it still holds a tremendous amount of weight on the NASDAQ as well as Amazon. And so you put those two together, that's been kind of propping up the NASDAQ here over the last week. Anybody trade Apple last week? Thank you, Don. I appreciate the compliment on the dogs. Only one person traded Apple? Come on. There's well over 25 people here today. Okay. There we go. All right. Hopefully you guys made some money. I really knocked it out of the park. I did a bull call, came in on Wednesday. 117, 119. I paid 49 cents, sold it for $1.84 at 12:56 p.m. on Friday. It's just right when Apple peaked at 120, right when it pulled back a little bit, then ran up. That's when I sold it. So some people are, are in Apple for a little bit longer. I'm going to show you guys a chart on Apple that I think it'll be interesting to really look at the macro picture. But let's finish up here. You guys see where we're kind of bouncing off the, this 1989 level. We're at the 17,244 level, 17,364. So again, these are Heikin Ashi, so they're not reflecting the exact close when you're looking at these, but it gives you a visual distinction between traditional candles of the direction and trend of the indexes. And this is important to know, right? Now from here, I'm going to go still through the macro. I wasn't going to do this, but let's do this, bringing up best choice. Let's go to the seasonality. Let's look at the indexes. We can look at the NASDAQ first. It's asterisk COMP on best choice, because this is going to tell you what you can expect historically, and that's pretty important. Yeah, Bib was a great trade, Earl. I loved it. That was real good. So here you go, folks. and this is a 10-year history, but it's showing that the NASDAQ typically goes down from about the middle of the month towards the end. We have a little pull-up right here. See, 90% long from the beginning to the middle. And if you look at the indexes, once again, you see this detrending price oscillator is pulling up, and so is this what's called a MOBO, which really is a tweaked Bollinger Bands that David Elliott did. So it is in an up, pulling up, and still in the long run, in the larger picture, saying it's going to pull up. You still have a 49 EMA above the 89. Very important. I've said this many times. When the 49 is above the 89 EMA, stay long. You can see the same thing on the S&P. You can see the same thing on the Dow. I can shrink this so you can see a little bit more of the macro picture. So linear regression pointing up, 49 above the 89 on all three indices, but we do have a retracement here, right to the 38.2. Didn't quite make it on the NASDAQ, and again, that's because of Amazon and Apple. So let's go to short term. This is what we can expect this week. Every first Friday of the month, unemployment's coming out, as well as the jobless claims the day before on Thursday. This is going to be an important week. It's going to be a really temperature gauge starting the second month of the year. How is the economy kind of clicking along? So nothing else in between. You got an ADP. Again, this is kind of a precursor, the ADP unemployment report, because a lot of people do their payroll through ADP, a lot of large corporations. So this will give us kind of a hint of what we can expect for the next day. So watch out. These things, as you know, will make the market react, so be aware of that. Wednesday morning ADP, Thursday morning jobless claims, and of course Friday morning the unemployment situation. So that's the micro picture that you need to look for this week, entering or exiting a trade. Okay, I'm going to go back to the macro picture here, giving a view of the VIX versus the SPY. Very interesting. You can see the VIX is retraced to the 50%. The VIX, again, is the fear index. It's the contrarian indicator. When it goes up, the market goes down. This is the SPYs. This is the spider on the ETF of the S&P 500. So you see we have a detrending price oscillator coming down on both. But we also had actually a pull up and a pull back down on the VIX today. So you can see it went down 1.54, whereas the S&P spiders went up a little bit. What did the market finish today? I didn't even see. Oh, I didn't even look at that. I was so busy looking at 156 different earnings coming out this week and calendar spreads and everything else. So, wow, market really rallied, didn't it? Really rallied. But, look what happened Friday. It tanked, and then it rallies today. Then tomorrow it tanks, and it rallies. I mean, this is a typical ebb and flow that you can see that's happening in the market. So expect it to continue. Look at this choppiness. Down, up, down, up, down. What do you expect? Probably it's going to go up a little bit, right? Even though Heiken Ashi reflects the actual trend. It's not showing a candlestick, which would have been a green candlestick. This would have been green on the S&P if it was a regular candle. This is actually showing the continued downtrend. Okay, so we looked at the macro, we looked at the micro, we looked at the VIX pulled down, even though we have a hull pulling up and a hull pulling down still on the S&P. So overall, though, it's still bullish trend. Okay, it's still a bullish trend on the S&P, but it will historically, from best choice, as you can see, pull up, and then 80% probability for it to pull down middle of the month to the end. You can do the same thing for the Dow, asterisk DWI space X. Of course, this is giving a tremendous amount of history. Maybe I want to do, let's try asterisk DJI and see if that, there we go. Again, we have the same long probability going up between now and the middle of the month on the Dow, and the same short. So that's kind of what you can expect. And also asterisk XPX, no different on the S&P, along from the beginning to the middle, and for it to go down from the middle to the end. So all indexes from a historical perspective say we're going to be bullish between now and the middle of the month, and expect it to be bearish from the middle of the month to the beginning of March. So plan your trades accordingly, because the market's going to move 80-90% of the market, rest of the stocks. Okay, let's get right into trades that I am looking at. Amazon keeps going up. This is a 20-day 1 hour. Still very bullish. If you look at Gary's 11, these are the 11 major stocks that I track, and I'll do weekly bull call spreads or bear calls on them. Got to play both sides of the market, though, if you're going to do that. Just wait for breakout and follow the trend. But yeah, Amazon, boy, up $9.94. Apple managed to get up to 118.63. But let's talk about Apple. Again, this is a 20-day 1 hour to give you an indication. Again, 49's above the 89, but I flipped to a lot of charts, guys. A lot of charts. I want to see all sorts of different perspectives. How about looking at a 10-year monthly on Apple for you people that like to trade a little bit longer term? Let's blow this up a little bit. Let's change this to Heiken Ashi. So we can take a look at something that was very interesting that I looked at. Okay, everybody on here who knows me knows that I'm a big believer of Fibonacci extensions and retracement. It's just because we're part of the market, and that's what Fibonacci is. It's really taking human nature and the repeating events that happen in it. So, and it doesn't matter if you do retracements or if you do extensions, it's all the same. So I can distinctly see the pull down, right? So I'm going to do a Fibonacci retracement to see where this Apple could potentially go to on a monthly basis. Click the top there, and I'll go to the bottom right here. Click, and look at that. Right at the 138.2 extension. Isn't that pretty interesting, everybody? Where the stock busted right above it, 118.63. So let's shrink this a little bit. There's nothing between that and 128.97, folks. So write that number down, because that'll be your next resistance part. There's nothing that's going to stop. And again, this is on a monthly basis, though. Something very interesting is I like to trade Apple. So if you're going to be a little bit longer term, wait for a retracement on it, buy a call long, or buy a calendar, and that will be a target place for you. The next target, of course, is I don't even have it set, but well, no, that's the last one I wanted. That's the 161.8. That is the golden rule number. That's where everything hits that, and then it turns around and comes back down. So I thought that was very interesting. I wanted to show you guys. And hopefully you can benefit from that. Now I'll just go to here. 30. Let's go to 1 hour. Heiken Ashi, gives you a total different picture, doesn't it? You can really see when to stay in a trade, to get out. Of course, this was earnings on Apple. You can see how all of these indicators just pretty much line up. If I put my crosshair right there, you have 1, to 3 indicators that have told you to go long on that day. Obviously, you didn't know on this day, but it was touching the bottom of linear regression. Okay, first on the list. Let's change this back to candlesticks. First stock on the list is Disney, coming up tomorrow. I think they're going to blow it out of the water. So you know what I'll do. This is, by the way, a great site, folks, if you don't use it. Okay, NASDAQ really gives you all the information you really would need, from fundamental to technical. Just type in a symbol, DIS. There's Walt Disney. These are all the stocks that I was looking at over the weekend. And you have all sorts of menu. Your menu on your left gives you a ton of information. One of the first things you want to go to is analysts. What do they say? Okay. Well, you can see the consensus. You can see here, but let's get more specific. Go to recommendations and see what they're saying. Well, you can see strong buy. 12 out of 21 say buy the stock. So that's pretty strong. You can go on to EPS, you can go on to PE growth, the PEG ratio, all of this stuff, and I do, because that's important to understand. We don't have time to go over it, but I'm showing you a website that it's really, really good. You can even go into guru analysis, which is kind of cool. Shows you the various gurus out there, Peter Lynch, Validia, you got Motley Fool on there, Martin Zweig. You know, there's all these huge players out there. Peter Lynch doesn't like him. Everybody else has a pretty strong liking of him. So it gives you a little bit more, what are the big boys thinking as well. Great site, great site. Also, I want to turn you on to another one that one of our members turned me on to. And Bob, I spent a lot of time researching Quantya. Very, very interesting site. Great, great find. But I did realize it's only doing the math. It's not doing any of the subjective or historical, and you got to be careful with that. It just literally calculates what is the absolute best option based on the strategy you want to do, and it picks out the exact strike prices, and it ranks it from high to low. I want to show you this site, guys, so you guys can also write it down. It's called Quantya.com. It's free. Just register. It's all free. I go by BCS Trader. You can type in any symbol. Let's type in Disney. You can select an expiration. There's the weekly. Well, let's go to the monthly. Here's the monthly, and I'll say search options. Now, what's cool is you can filter which option you want it to look at. Strategies. Every strategy you can think of is on there. So let's just do a long call, okay? Get rid of bull put, do long call. And this is for February's expiration. Now there's 3 ways that it will find these trades. Highest potential, average return, lowest risk. Pretty cool. Really bodes to everybody's style of trading. Me, I want highest potential. And it's going to tell you what the potential return is based on the Greeks, the open interest, the volume, and the days to expiration. That's a lot of math calculation. It'll further, you can click on the analysis, and it will show you every breakdown that you need to see. The forecast of implied distribution, volatility skew, gives you all the deltas, everything. It does all that math. If you don't want to know all that, fine. Just let it crunch numbers for you, but be aware it's based on mathematics, folks. Okay? And that's what I learned, Bob, is that it's not necessarily, I'm going to go for the best one here, the 94 February's calls for $1.02. Well, wait a second. What do we expect Disney to do It's based on our software that we all own. Defaultly, It's set to best trading a whole zone, minimum days of 14. So when you drag your mouse, it's going to look for the best rating with the minimum number of trading days of 14, basically 2 weeks. So let's go over this area from February to March and let go. And we got a 90% probability win. I believe there's a better one in there, though. Now, one of the habits I always do, and you new people that are on board watching this, whenever you're looking at the seasonality chart, remember, before you drag your mouse on anything, go to the puzzle piece, click it. Don't mess with any of this. Just click Start Download. It's very, very quick, but it will update any inaccurate high-low open-close data that you may have downloaded at the end of the night, because you're downloading a tremendous amount of information. Sometimes there's corrupt information. So it'll adjust your chart to being accurate. And then you want to highlight. And we've got a 8 out of 9 year possibility. Let's go to best profit to see if there's anything more to be squeezed out of it. No, 66, 77. So the best rating of the whole zone gives us the most accurate representation. It's about a 4% move. And I'm going to weigh the last 4 or 5 years. I'm going to look at that percentage, that dollar move and percentage move. I'm looking for consistency in movement, because an 8.7% move on a $100 stock versus or an $8 stock, it's still an 8.7% move. So the more consistency I have in percentage moves, the better I like the historical view of this thing. So I got about a 4% move. Let's go to a trade. Go to Disney. Let's look at this month's expiration. Stock only went up 97 cents today, but it got pulled up because of everything else. I mean, the NASDAQ went up 41 points today. So let's take 91.93, multiply that by what we expected historically to move. I've changed it to decimal, but that's 4% move. Gives me a target price, $95.60. Now, when I was originally doing the math, I liked, and this was over the weekend when it was 97 cents less, that math put me below 95. So I chose the 92.50s for $1.68. I had it down for $1.37 over the weekend. So it's gone up because the price has gone up. Now, I'm going to repeat this to everybody. Everybody who watches and is a member of this weekly video gets the recap of all the different trades that I look at. Okay? Sometimes I'll put in articles for you to read. You just click it. It'll take you right to the article. There's a great article in Reuters, what to look out for this week, so look for that. Read that. Great information. I put some calendar spreads on there. Win-loss ratio. And I also, now you people that are new and are in for a month free will not get the historical. You're going to get what is today and forward, because this historical goes all the way back to September. And that's really reserved for paying members. So the point I'm making, didn't want to necessarily go down that road. The point I'm making is this. All of these strikes that I'm picking out, the prices I'm looking at, are from yesterday's close, or basically Friday's close. I'm doing this work over the weekend. So inevitably, things will change. You folks need to look at this and determine what is the best strike, what is the best opportunity for you. What I do a lot for this weekly traders group is find the trades, which, folks, takes a lot of time. Takes a lot of time to go through seasonality, linear regression, different strikes, prices, fundamentals, peg ratios, blah, 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 to really say, these are high probability trades that I want you guys to look at. But remember, please, I think I'm going to put that caveat up here because things change. These aren't necessarily the strike levels that I'm going to choose, just like what we're doing right now. When we did this math based on seasonality, puts Disney at over 95. Okay? Well, look, we got 7,549 open interest, people holding contracts overnight on the 92.5s. 637 bought or sold today. But boy, the 95s has got even more today. Now, suddenly your eyes jump to here and you go, wow, 17,000 for the 97.5s? Holy Toledo. Well, you people who have best choice and are looking at linear regression, one of the things you can look at is a yearly chart for Disney. You could see it sitting at the low end of the extreme, and it's below that bottom line. It's a good opportunity to buy long. So you would move your cursor off the chart, and you would follow this around to your eyes falling on that high right there. See, that says 97.56. Well, that's a lot of reason, not that they have best choice, but they're using other tools. Well, why you have 17,000 open interest on Disney. Applied volatility is fairly low. Probability of touching is fairly low as well. However, and you got a delta that's under 20. I'm sorry, where's my delta? Yeah, it's down here at 10. A normal rule of thumb is if I'm going to be directionally trading. Now, this is a directional trade that is not due to an earnings trade. I want at least a 20 delta. If it's an earnings trade, I'm not so concerned about it because I'm looking for a gap up. Just like we happened with Netflix and Apple and Visa. I don't know if anybody took advantage of that. That was a nice hit. BIIB was a great hit. So it is too low down there, Jerry. But again, I'm kind of addressing the fact that it doesn't. That's not so much of a concern for me because I'm looking for a directional trade. Now, I have to have something to validate that high going that far out of the money. Now, one of the tools I just did was just BCS, using what linear regression high is. There's 97.56. Now, that's at the absolute top end. One of my concerns is, though, from a historical perspective, right, it's only moving average about 4%, which we already did the math, that really, based on today's close, tomorrow, different story, folks. Do the math. You know, see what happens with the market. See what happens with Disney. If Disney goes up another $1, which is not that typical. I mean, yeah, when a stock is moving up prior to earnings, that's generally speaking a good sign. It's generally not a good sign when it starts to sell off before earnings, generally speaking. But, of course, there was a sell-off with Apple before earnings last week, and look what Apple did. So, again, generally speaking only. Typically, you have consolidation, though. So I want something to validate that 97.5. I'm going to go to my charts, folks, because I'm a real chartist. I want to type in Disney. Got a lot of positive sign here, folks. If anybody can see this right here. Got 1, 2, 3. This is oversold, pulling up, hitting the bottom of linear regression. Again, this is a 20-day hourly. It's bouncing off the bottom. You could see it tested the bottom there quite a bit, right? High was 96.43. So just on a 20-day, I can do a Fibonacci retracement on that. Click. Click. The 100%, that's retracement to the top, puts me at 96. But what's the next one? Ah, there's the next one, the 138. There's nothing between. Well, let me double check that. There's nothing in between. Yeah, there's nothing in between. There's the 1, then 1.382, then 1.618. That's, of course, the magic number. I don't have the 200 because we don't do that much of a long term. So your next resistance level, if everybody can see this, is 98.86. So, yeah, if it busts through the last 20-day high, 96.43, it could run up to there. But typically and historically, it's not going to do it off a gap up. So you're going to have to buy some time. So you probably wouldn't do Febs because Feb gives you 3 weeks. I would want more time than that. Maybe you'd go to one of the weeklies further out. Let's see if there's any action here. Now you got some here around the 99-100, but let's take a look at March. Well, you got 10,000 that have bought for 37 cents at the 100. There it is. Magic golden number, 161.8. And I have not done this beforehand, folks, so this is the stuff I go through. This is what validates me and helps me to make a decision on, am I going to stretch further out of the money? If I'm going to, I'm definitely going to buy time. If I'm going to be short term and I'm looking for a pop, I'm going to be closer to the money. I hope everybody understands that, right? Okay, so that's Disney. You can do a bull call on that as well, a bull put. I'm not going to go through those. You guys know how to do that. It's less return, but less risk. I'm going to bounce here a little bit to another one that I thought was really interesting. It's a company called BIG. B-I-G. I like this chart, guys. Really like this chart. Again, remember, hit your puzzle piece, click Start Download, make it quick. I like this. So we're here in February. I'm going to go to tab 3, change it from best rating, because best rating will not find me this entire trade. Go to best profit. I'm going to start here, drag it right up into April, and see what it gives me. Pretty interesting. I'll admit I did this beforehand, but I wanted to show you this trade that I found, and I went, wow, that's really cool. 31%, 9 out of 9 years, 100% move. Pretty consistent here. We had some big moves back here in 08, 09. So what does that tell you? That tells you I can look for a longer term option out here in April. Let's see what the price is. First thing that I think of, is it too expensive? Is there volume there? Is it even worth me looking at? I mean, from a seasonal standpoint, it is. Well, March stinks. There's nothing. What's February? Oh, February's a little bit more. So definitely not March. Let's go to April. Okay. So what I see here that I kind of liked, now it's only up 18 cents. I hope that this is going to work again just the way I did it. Oh, no. I know what I did. I said, let's go cheap. Now, here's a problem with this trade, though. There's only 19 open interest. But what I did, which I thought was really good, to get into this thing for cheap and buy time, buy April's, but instead of paying $3.90, which is a high premium to pay for a $46 stock, right? I mean, we like cheap options because the ROI is better based on a cheap price. You have a 50% increase in your premium on a 10-cent option versus a dollar option. Well, what's your ROI? It's a heck of a lot better at the lower price. That's why we like cheap options. So I said, well, what if I did a counter on this? If I bought the April, and to reduce the cost, I would sell the March. When I did this was 30 cents. Now it's 25. I like it even better. For me to get into the BIG's April 45, and it's sitting at $46, which means I've got intrinsic value of $1.09 already for 25 cents. I love it, guys. I love it. And gals, excuse me. I should make sure that I am talking to all genders here. I apologize for you ladies. Real nice trade, right, guys? I like that setup. So that's big. I listed that. Let's go back to some earnings trades this week. There's a lot. I don't like Twitter, just so you know. Again, that's just my opinion. CMG is also coming out. That's tomorrow after market. But, you look at CMG and you go, well, gosh, it rock and rolls here, right? But that's in March. What's it do around the earnings in February? Well, a pretty strong probability, right? 87.50. That's why I listed it as other notable trades this week. Why? Because it is an expensive option to play. It's pretty much out of my league. There's your Febs in the 20s. I mean, if you did the math, say, okay, I expect an average of 3.74% move. Stock is at $712.55. Multiply it by 1.03. What was it? 74. 374. Target of 739. Okay. But folks, I also got a MMM up here, market maker move. That's what they expect. The market makers, based on volatility, based on open interest, based on days to expiration, based on the Greeks, they're saying a $46 move up or down. Well, if we're bullish on this thing, and we think historically there's a 87% probability around this time from February 4th to the middle of the month that it's going to go up about 3.74%, and that puts us at 739. But let's just do some basic math. $40 plus 712 puts me at 752 plus. Add $6, that's 758. Right? So it allows you to potentially stretch a lot more. Let's add in some more options to this. $750s, 128. That's rich for my blood, folks. No, Don, I wouldn't, to answer your question. One of our members asked, would I buy a long call on BIG? It's too expensive. That's why, Don, I showed people how to be able to get into a longer term option for dirt cheap. That's why I would sell the April or sell the March at the money and then buy that. You see what I'm saying? Rather than have to pay $3.09. That's too much premium. It's way too much premium. So it's an easier way to get into buying the long term. Just sell the March month to be able to reduce the cost. Again, rich for my blood, folks. So that's why I eliminated. I mean, the only way you can trade this is doing a bull call or do a credit and sell it. But one of the concerns I had is, let's go back to the NASDAQ site and put in CMG. Come on. There it is. Let's go to analysis. And let's go to recommendations. That concerns me. You got nearly 50% of the analysts. Actually, you do have 50% of the analysts saying hold. And you got 50% say buy. Not a real good consensus. You see what I'm saying? Good, Don. It clicked for you. Good. Good, good, good. It's a neat little trick to be able to get in and buy some time, but save some money and premium at the same time. When you can find those kind of deals, 25 cents as I just showed you. We're going back to big, everybody. One of our members is still asking about big. The stock was $46. If you're paying 25 cents to be in the money already, it's actually at the money, but you've got intrinsic value. My gosh, you're paying, 0.5% premium. That's where, the lower the price is, the more that stock moves, the more ROI you're going to get, more return on your money. So this is what concerned me. The expensive price concerned me. You guys do what you want. I'm not trading it, though. But I listed it because there is some good history behind it in this regards. And also, if you take a look and say, okay, let me change this back to January. And so we're looking in this area here. Okay, we still have that, wherever that trade was. I can't even find it now. See, that's one of the squirrely things is when you change the time frames you're looking at, it kind of skews things a little bit. Okay, from the 29th there. Anyways, bull call is the only thing I would do if I was going to do this. Let's not beat this up. Next, I do like that's coming up, though, after Disney is NXPI. I mentioned this already. Is anybody in that or not? It's one of the suppliers for Apple, so you guys know. It also happens to be the #1 stock on the IBD list. So, but for you newbies coming here, it doesn't have a lot of history. As you see, there's a warning. It doesn't even have 5 years worth of history. The less historical data you have, the less you have of a repeating pattern. That's just statistics. However, that set aside, we do have at least that many years of history. 4, and we've got very consistent percentage moves. It is a 100% move in February from the beginning to the middle. NXPI recommendations. Can't get better than that, folks. 12 out of 13 say buy that thing, and 11 say strong buy. So, they are in the know. They know something, so that's real strong. You got a 13.5% move. Let's see what the options cost. And huge volume, both sides of the fence. Now, a lot of people who are new to this are thinking, oh gosh, if there's that many people buying calls but that many people selling calls or selling puts, or excuse me, new people coming in when you first learn about options, and hopefully most of you are seasoned here, but for you that aren't, when you're looking at this open interest and volume and you see an equal amount on both sides, you're thinking, well, gosh, there's uncertainty. It's not true. The Chicago Board of Exchange, which is another trade coming up this week, CBOE, as it's called, CBOE, from 1997 to 1999, they did a study of every single option that was bought or sold. And they looked at how many options expired worthless in that 3-year period of time. The number is, percentage-wise, 76% of all options expired worthless in those 3 years. Now, they could say it's curve-fitted, time-fitted, and, that was that wasn't a fair indication. Well, they repeated that same experiment from 2001 to 2003. And they got the same results, folks. So with that in mind, it's the sellers of options that are primarily in the marketplace. Doesn't mean you can't make money buying options, don't get me wrong. But understand that those odds are, and that's why you see this kind of volume. People are selling that 80. They're selling that because they're still expecting the stock to go up, but they're collecting premium and pocketing it. Okay? So, in other words, if I sold that 80 and protected myself in case the trade went against me and bought that 70, I just pocketed $3.60 in my pocket. That's a lot. And my risk is actually less than that. I'm sorry, my loss is less than double of that if it goes against me. But my break even is $76.40. Now, I wouldn't do a $5 spread on that. But all I'm saying is you've got people that are selling this, perhaps buying that for $1.30 credit. Don't think that people are loading up and buying puts is what the point I'm trying to make. Okay? So NXPI, expect a 13.5% pop. What did it do today? It was down $1.47. So I had picked out over the weekend a Feb 85 for myself. Puts me at 88. So being conservative, I still like the 85s. And you can do bull calls and bull puts and get credits as well as limit your risk by doing a bull call spread. Okay, another company coming up this week, folks, that we don't talk about a lot is Coors. It's a great company, Michael Kors Holding. Again, not a lot of history, but boy, it's a screamer, folks. Look at that, 22%, 15%, 25% move, 26.81% move here in February. Huge. No blue lines here, but of course you only got 3 years worth of history. Be careful. By the way, Coors is coming up on the 5th before market. The 5th before market. That, some concerns there, right? That's a mixed bag. You got 7 that say buy and 10 that say hold, 1 say underperform. So that's what the analysts have to say. Another great site to go to, folks, is Seeking Alpha, and type in whatever symbol you want. You can join. It's free. See what kind of breaking news is about that particular stock, what people are writing about it, right? And of course, here was on January 27th, all of these stocks, including NXPI and Skyworks, of course, we traded that, made a lot of money, all rose because of Apple's earnings. And they're coming out on the 4th. You could see what they say about this, what articles. This is just saying what they expect it to be and the analysts to be. It's not really giving you any great fundamental indications of what they do, but still a great site to go to. So NXPI, that's on the 4th. Or I'm sorry, Coors. I was looking at Coors is what I meant to say. That was not NXPI. Thanks. That's the company you want to do. Look at that. That was written on the 27th. Some guy named Michael Grogan. Based on risk valuation and earnings growth, Michael Kors looks highly attractive. So, what I call analysts, because they're anal about what they do, aren't always right. Okay? Still it's good to look at it objectively. You can click on analysis here, and of course it'll give you the breakdown, and everything else. So great site also to look at for some third-party fundamental. Okay, ICE is coming up, Intercontinental Exchange. That's also coming up. Not real excited about it, but it's got some seasonality behind it. 8 out of 9 years, pretty consistent over the last 6-7 years. 8.44% move. Not a lot of volume is one of my concerns, meaning open interest. The 210 strike for 450 is if I was going to do this, I had it. Oh wow, I had it completely wrong as far as the price. Oh, I'm sorry. Maybe I did a bulk haul on this, a 200, 210. Even that's expensive, though. $6.40 on a $10 spread, I wouldn't do it. So, and 220 is stretching it. 8.44% move. Compare that to a Feb that's got $11 right here. See that? $11 potential move. 11 plus 208 puts you at what? 217. That's below 220. And so that's expensive in my book. Meaning cash-wise. Is it expensive premium compared to a stock that's 208? No. It's only about 2.2% premium. Okay, CMI, Cummings is coming up too. Ten out of 10. There it is. 90% move is what I saw. 7.28% move. What did the stock do? Well, stock's up strong today. $3.55. At about a 2-3% move today, which was good. I had Feb 144s is what I had put, but I had them for $2.15 over the weekend, and so now they're quite a bit more. Remember, 7.28% move. The market makers are looking at a $5 move. That puts it at 148. If you held it to expiration, it's a $9 move. Puts you at 152. Would that justify coming out here to the 150s? Yeah, you got a Delta 22 for $1.25. It's cheap. But boy, that thing would have to really rock and roll and continue to move and really smoke earnings on all three cylinders. What's it look like from a charting perspective? I did the extensions here. So, yeah, the 150, I could see why it's doing it because it's between the 38 and the 50 extension. And that's below the last high. So from a technical perspective, I could see that. I don't know what the analysts think. I'm sorry, the analysts think about this. Well, strong buy. Pretty much a strong buy in my book on that. So I listed that trade. That's coming up on the 5th before market. The 5th before market. LinkedIn's coming up. Yelp is coming up. Cboe's coming up too. Which one do you want me to go over? LinkedIn, Yelp, or Cboe? Talk to me, folks, because we're starting to get into the witching hour here about 5 o'clock. Excuse me. Tim says Yelp. LinkedIn. You guys want me to look at all of them, I know. LN. KD. LinkedIn. Again, not a lot of years of history, but kind of smokes it. 3 out of 3. But again, that's from the 25th. Now, see if that happens when you don't have a lot of history and it looks like it starts in January. First thing I'm going to ask myself, has the move already started? How much of that do I have to delete because it says it starts around the 25th? Remember, this is the 2nd of February. Has it been moving up? Okay, so I'm going to put my cursor. Here's the date. I'm going to put my cursor on the 5th or the 25th. No, there isn't a 25th, so it jumps to from the 23rd to the 26th. So the 26th would have been way the heck up here. And that thing closed at 226, and it's definitely down. It's closed at 224. And this closed at 226. So it's down from there. So I wouldn't subtract anything from seasonality, just a technique that I use. Okay? I could look to see, is there something right in here? I'm just trying to find that area. If I can't find it, one of the other techniques I've been using lately is best rating. See if it finds me. Well, that statistic right there I don't like. So LinkedIn, I'm going to state based on 100%. Pretty strong. Pretty strong. 19 out of 27 say buy. 18 say strong buy. I mean, that's, when you see something like that, that means they're pretty bullish on that thing. So we know it's about a 15% move. Let's see what the market makers think about it. LNKD. Well, let's also look at the charts and see what volatility, implied volatility there is, and wow, it ranks. It's another thing that I do a lot. Now it's at the 63% of its last year high. It's a 63 percentile of its full year rank from 0 to 100 of its implied volatility. So it's up there, folks. It's up there, which means you could sell that and get a credit if it moves into your direction. All right. The key is you still have to be directionally correct, whether you're going to, do a bull put spread or you're going to sell a call. I wouldn't do a bear calls again. Bull put is what's going to collect you a credit because you're still bullish on the trade from a historical perspective, from a analyst perspective. So let's go see what the market makers think. $18 move is what they're expecting. Puts you at, what is that, 242? Held in expiration is a $24 move, an extra $6. Puts you at 250. So there's 828 at the 250s. There is the 240s. And I think, what did I put? That's what I put because it didn't really change. So that's what I liked. Say, well, that's $5.90. Yeah, but you know what, folks? It's only about 2%. It's got a 33 delta. Of course, for the bull call, I did the 235, 240s. What was that? 235, 240s. Get into that for $1.60. It's all you risk. On a $224 stock, that's not bad. Bull put, I put 225, 220, 225, 220, 240 credit. Is that what I put? I had a 235 credit, so it's changed a little bit because it's gone down 17 cents. So those are some options, okay? Let's go over, what else did you guys ask me? Everybody wants to go over all of them. Okay, so let's just go over all of them. What's the next one? Yelp. Again, not a lot of history, folks. Careful. But great companies. I mean, they're really, they're in the hot spot as far as investors and institutional people and blah, blah, blah. I mean, everybody likes these things. We got 16 strong buy on the analyst side. We got a historical, not a lot, folks, 2 years, but 2 out of 2. So let's take a look at what Yelp is loading up as. Yelp, how much did it move today? Up $1. That's not much, but $1 on a $53 stock now. About 1% move. So what did I put? I put the 55s for $3. What did I have? 270. And went up $1. So, market makers say $5, $5.50. It puts you at 58. right? So could I stretch to the 55 and a halves? Yeah, problem is not a lot of open interest, folks, only 20. Now Yelp comes out on the 5th aftermarket, so maybe you could watch and see what kind of volume pops in. But when you do that on a directional trade, just buying a direct call, you take the risk of paying more because the stock ends up starting to rally and moving in your direction, but the premium also goes up. At 10,000 sitting way out here, I mean, they're probably selling that, the 6250s. Let's take a look at the charts. It's been on a downtrend, but do you see what's happening here? It's consolidating. So I did a fib retracement on that. You have $63. You know what? Let's add in the 23. So you got $58 for the first resistance level. And then again, that would really put you at about what market makers expect to do. So you could stretch a little bit. I didn't. I went close to the money. I like a nice 47 delta, which you take away the 9 cents, that still puts me at, what is that, 38 cents. So for every dollar movement, I'm getting 38 cents. That'll work if I expect a $5 move. So that's like $1.50, $1.80 on my option. That would give me a 50-60% return or more, especially if it goes into the money. Last one, SIBO. Again, not a lot of history. Great seasonal, 4 years, 11.7% move. CBOE. Come on. Thank you. Not so froggy on the analysts, I think. Yeah, analysts really don't. You know, 4 buy, 6 hold. Seasonally speaking, it rock and rolls. Option standpoint, I had Feb 65s for 95 cents. One of the things I don't like, folks, when you see this kind of spread between at the money and one strike out, and it's only $2.50. It's sitting at $63.99 already, almost $1 from, right? So at the money and then one strike in. When you see that kind of spread, it's because it's low volume. And you look at this month, some more loading up here at 65. You can do it for $1.75. 43 delta, less 2, so that's 41. I had $1.20. I don't know what I had. What did I have? I had the 65s. Oh, it went down 48 cents. That's why. So it's cheaper now. So I showed you big. Other notable earnings, so you guys know, Archer Daniels is coming out, ADM. You can kind of look at it. It's got a strong seasonal. Okay, 9 out of 9. I didn't quite have time to put all of these in, but I listed them so you can look at them. ADM, what is it, 9 out of 9. You got a 6.09% move. So it's only $1.79. So gosh, barely 50. You hold it to expiration, it's plus 3, puts you at 51. So you got the 50s loading up right there. 27 delta, 49 cents. It's a 1% premium. Would I do that? Would I stretch there? Let's see what this says. Well, you got some consolidation happening. First resistance, well, yeah, first resistance is at $58. I don't know if I like it. Last high, of course, was 53. I mean, $58. I'm sorry, it was 53. So between 61 and 78.6 would put you at the 50. So is it possible? Yeah, but based on a historical percent move of 6.09, I don't know if I would do that. 4817 times 1.0689. Yeah, it's stretched to the 50 if I was to do this. 49 cents. So I listed that. Gilead is coming out. Twitter I didn't like. General Motors is coming out. Exxon is coming out. Groupon is coming out. I listed all of those. I gave you that big calendar one. And for you people that like calendars, Bob, I went through 142 specifically for you to look at. HSY, Hershey's I don't like. I don't know why I didn't list it. I just don't like it. I think it's because it's had a really nice run. Oh, is it good to buy now? Okay, so yeah, it lost an earning. It wasn't an earnings trade. Yeah, Jerry, that's something if you'd buy some time on that. From a technical perspective, Hershey from a seasonality, you know, let's take a look a little bit longer here. Well, let me hit this to make sure. All right, run it into April. Well, yeah, I like it, Jer. I mean, not a big movement, 7.52. It missed. Company is not going away. Chocolate prices have gone down. Cadbury, is it Cadbury, I think, that decided to pull out and no longer sell? One of their competitors has gone back over the pond. I forgot who it was, which only bodes well for Hershey. So cost of sugar and commodities has gone down. So, yeah, Hershey may be a trade to look at for a longer term. Oh, a ton of people at the 110s. I could see why. Yeah, 100% retracement is right at 112, or extension from the low to the high to the low. Next one is 117. $115 for 26 cents. I don't know if I'd go that far. Two-year monthly puts the high regression at 117. That's exactly where the 138.2 is. So it's a possibility. Buy a cheap one out there. Don't like the delta at 7. Probably do the 110s instead for 76 cents. Still paying a lot less. Takes you out into March. And seasonally, this thing seems to run. Okay, guys, it's 12 minutes after. Are there any stocks you guys want me to look at besides the one you've mentioned already? EXP also? Eagle Materials, what do they do, Jerry? One of the things you guys can do if you're still here, some of the new people, is you can go to help. If you don't know what the company does, go to Internet Links, current stock, go to Yahoo News. It'll direct you right to the site, and you can learn everything. It's got all the stuff that the NASDAQ has too. It's a good site, and you can say, hey, what does this company do, right? And it'll give you a summary. You can go to company events, your profile, company profile. Eagle Materials manufacturers, distributors building products. So they're a distributor building products. Okay. Industrial, commercial, and infrastructure in the U.S. Okay. All right. Which is, again, tied to the building industry. So, building hasn't been bad. Let's see. Somebody else mentioned some stock. TT. Let's take a look at it. Let's continue with this real quick just so we can finish. Now it's got maybe March's expiration. Yeah, it's way, way oversold. Has earnings come out? Bullish candle today. MAC that's turned up. I'd wait. This is just a simple 821. Wait for some kind of confirmation, Jer, because this has definitely been in a downtrend. TTWO. TTWO. To Take Interactive. Never heard of the company. Okay. Kind of scattered, Don, in regards to percentage movements. Not, 76 cents all the way to $8. I mean, it's kind of all over the place. It gives me a little bit more accurate. 9 out of 9. Where's it at right now? It's got a nice trend. I like that. Where's it at in a 2-year pocket? Well, God, real nice. What kind of earnings this company have? Ooh. Now, what do we have here? Divergence. Company is smoking in earnings. Price of the security is low, and this is the feeling of the consumer and what they feel the value of the stock is. So it's obviously underpriced based on its earnings over the last 4 quarters. $1.85 for $29 stock. It's kind of expensive, meaning premium-wise, right? You're paying almost a 5% premium or something like? No, it's even more than 5%. 1.85 divided by $29.99. Oops. 1.85 divided by 29.99. Yeah, well, it's a 6%, 6.1% premium. It's not that bad. It's not outrageous. 10% or more would be outrageous. So yeah, the 30s, what does it look like from my charts? Yeah, 31 on a 1 year. Last high was 30. Everything looks very strong. Nice leashing effect. Security comes out, comes back, comes out, comes back, comes out. Maybe it'll pull back a little bit and then run back up. So buying some time on that's a pretty good find, Don. I like that, TTWO. A lot of IV, though, man. It's at the 68th percentile of its yearly implied volatility, which is quite high. There's an event coming up, earnings event. Oh, it's tomorrow after market. Oh. Oh. What do they do, Don? NASDAQ. I'm sorry, one of the questions was what was the site I talked about Disney before I talked about Quantia, and that's the NASDAQ site. It's a great site. It's NASDAQ.com. It's free to join. Well, that's pretty strong. It's pretty strong. TTWO. Not a bad find. Not a bad find. Okay, it's getting a little bit late. This is going to take longer to render. Any last stocks you want me to look at, folks? Tech company software. Okay. To Take Interactive software, obviously, yeah. Save. Somebody asked me to take a look at Save. Not a lot of history. Spirit, 3 out of 3. Earnings are coming out next Tuesday before market. Strong historical, sitting about 75 percentile of its last 3-year movement. Not a lot of history, but definitely a strong movement upwards. 3 out of 3 years. Let's see what kind of open interest this thing has in volume. We all know airlines have been doing well, right? Raking in the profits. 9.78% move. They're expecting about a $4 move, puts you at about 80. So $1.75.33. It's at $7 move, 468. Yeah, it's kind of stretching it. I'd probably do a bull call on it just to save money. 215, that's under 250. Still have the opportunity to make double my money. And the break even at 77.15, which is only $2 from there. I mean, that's what I would do, because that's kind of pricey. I mean, I'd prefer to be closer to the money than 80 and stretching it that much, even though historically I could do a 9% move on this stock. $75.86 times 1.0985 gives me a target of 83. So that would be a play. That would definitely be a play, Leon. It's not spending and risking too much too. You know, about 2.5% premium. So analysts like it. Looks good seasonally. Not a bad looking trade. Any other ones you guys want me to look at? Speak now or forever hold your peace, as they would say in a wedding. Okay. Well, great session. Once again, I want to welcome all the new people on board. And always remember to do your math. These are suggestions. Do the math. Take a look at things. And have a great, great trading week, everybody. Talk to you next week.